Hi everyone, I am Dr.D.SAVITHIRI, Assistant Professor of Economics, A.D.M.COLLEGE, Autonomous, Nagapattinam. My topic is Banking and Economic Development. Banking means banking refers to the system of financial institutions such as banks and credit unions that provide various financial services to individuals, businesses, and governments. Banking services mainly include accepting deposit, lending money, facilitating transactions, and offering various financial products like savings account, loans, and credit cards. Banking play a crucial role in the economy by facilitating the flow of money and enabling economic activities. Functions of banks. Banks in India offer a wide range of banking service such as savings and checking accounts, loans, loans such as included into the personal loans, business loans, and mortgage, credit cards, investment services, and electronic banking options like online and mobile banking. The major functions of banks are almost the same, but the set of people in each sector or type deals with may differ. Given below the functions of the banks in India. Acceptance of deposits from the public, provide demand withdrawal facilities, lending facility, transfer of funds, issues of trap, provide customers with locker facilities, dealing with foreign exchange. Apart from the above mentioned list, various utilities functions also needed to be performed by the various banks. Banks can be classified into various types. Given below are the banks types in India: Central Bank, Cooperative Bank, Commercial Bank, Regional Rural Bank, Local Area Banks, Specialized Banks, Small Financial Banks, Payment Banks. First one is Commercial Bank. Commercial Bank organized under the Banking Companies Act in the year 1956. They operate on a commercial basis and its main objective is profit. They have a unified structure and are owned by the government, state, or any private entity. They tend to all sectors ranging from rural to urban. These banks do not charge concessional interest rates unless instructed by the Reserve Bank of India. Public deposits are the main sources of funds for these banks. The commercial banks can be further divided into three categories. First one is public sector bank, second one private sector banks, third one foreign banks. Public sector banks included into a bank where the majority stocks are owned by the government or the central bank of the country. Private sector banks, a bank where the majority stocks are owned by a private organizations or an individual or a group of people. Foreign bank, the bank with a headquarters in foreign countries and branches in our country, fall under this type of bank. About Reserve Bank of India, that means central bank. The Reserve Bank of India is the central bank of our country. Each country has a central bank that regulate all the other banks in that particular country. The main functions of the central bank is to act as the government bank and guide and regulate the other banking institutions in the country. Given below are the functions of the central bank of the country: guiding other banks, issuing currency, implementing the monetary policies, supervisor of the financial system. In other words, the central bank of the country may also be known as the banker's bank, as it provides assistance to the other banks of the country and manages the financial system of the country under the supervision of the government. The Reserve Bank of India, abbreviated as the RBI, is the Central Bank of India, meaning it is the apex body in the Indian financial system. It is owned by the Union Ministry of Finance. It acts as a regulatory body responsible for the regulations of the Indian banking system, as well as the control, issuing, and maintaining money supply in the Indian economy. Objectives of the Reserve Bank of India. Some of its major objectives can be seen as follows: to regulate the issues of banknote, to maintaining reserves with a view to securing monetary stability, and to operate the credit and currency system of the country to its advantage. Last one is to maintaining price stability while keeping in mind the objectives of growth. Structure of Reserve Bank of India. The structure started in Central Board of Directors to staff support of the Reserve Bank of India can be seen above the chart. The Central Board of Directors of RBI. The Central Board of Directors is the main committee of the Reserve Bank of India, responsible for its overall control and directions. It is a 21-member body comprising the following members. Official directors, they include the Governor of the Reserve Bank of India, not more than 4 Deputy Governor for a tenure of not more than 5 years. Non-official directors, they include 10 directors from various fields nominated by the Government of India for a tenure of 4 years. 4 directors representing the 4 local board of the Reserve Bank of India. 1 director nominated by each of the 4 local board in Mumbai, Kolkata, Chennai and Delhi. Government of officials nominated by the Government of India. Local board of RBI. The 4 zonal offices of the Reserve Bank of India are controlled by a local board for each. Each of these local board consists of 5 members who represent regional interest and the interest of cooperative and indigenous banks. Functions of Reserve Bank of India. The major functions of the Reserve Bank of India can be seen under the following 2 heads. Monetary functions of Reserve Bank of India. Monetary functions of the Reserve Bank of India included those functions which are concerned with money and money supply in the economy. Major functions coming in this category included issuer of banknote. The Reserve Bank of India has the monopoly of issuing currency notes except for 1 rupee note and coins. The 1 rupee note and the coins of all denominations are minted and issued by the Government of India, not the Reserve Bank of India, but they are circulated by the Reserve Bank of India. The RBI issues currency notes under a system called minimum reserve system. Banker to the government, the RBI acted as banking agent and financial advisor to the central as well as the state government. In this capacity, the RBI manages the government accounts and treasuries, keeps deposits of the government, lends to the government without any interest for the short term, buys and sells government securities on the government behalf, gives monetary and financial advice to the governments. Bankers Bank. The Reserve Bank of India is the banker of all scheduled and commercial banks. In this capacity, it performs the following functions. Keep the reserve banks in the form of cash reserve ratio, CRR, with itself. Provides a financial assistance to bank against mortgage securities. Rediscount bills of exchange. Lender of last resort. It also acted as a lender of last resort for the scheduled commercial bank. Usually, banks and other financial institutions borrow and lend amount themselves to meet their financial need. But in times of crisis, the SB approaches the RBI to get financial assistance. Custodian and manager of foreign exchange reserves. In order to stabilize the external value of Indian currency, the Reserve Bank of India maintaining the reserves of foreign currencies to stabilize the exchange rate. These functions of the Reserve Bank of India also helps to promote international trade. Controller of credit or money supply. It uses its monetary policy tools to control the volume of money supply according to economic situations of the nation. This helps in controlling inflation and deflation and helps stabilizing the general price level in the economy. General functions of Reserve Bank of India. The general functions of the Reserve Bank of India include functions related to general regulations and promotion of the banking system, so as to maintaining the health and growth of the banking system in the country. The major functions of included in these categories are as follows. Regulator of the bank. The Reserve Bank of India Act of 1934 and the Banking Regulations Act of 1949 entrusted the Reserve Bank of India with the power to regulate the banks in the country. In this capacity, the Reserve Bank of India performs functions such as licensing banks, prescribing minimum requirement of paid-up capital and reserves, etc. Promotional functions. The Reserve Bank of India works towards the promotion of the Indian financial system through functions such as enabling expansion of the commercial banks in terms of their branches in the country or abroad, promoting banking habit of people, promoting financial inclusion, consumer education and protection, promoting digital India initiatives in financial sectors, etc. E-banking. E-banking definitions. E-banking is the blanket term used to indicate a process through which a customer is allowed to carry out personal or commercial banking transactions using electronic and telecommunication network. It is a product offered by the bank which facilitates online banking, with the help of which the customer can have access to the bank account in just one click. E-banking covers facilities such as fund transfer, checking account statements, utility bill payment, opening of bank account, locating nearest ATM, obtaining information on financial products and services, applying for loans, etc. Using a personal computer, smartphone, laptop or personal digital assistant. Let's look at the type of digital payments. E-banking service, in simple words, e-banking refers to a banking arrangement with which the customer can perform various transactions over the internet, which is end-to-end encrypted, that is, it is completely safe and secure. E-banking promotes paperless or cashless transaction. It comes with a number of rights, responsibility and fees as well. The range of services covered under e-banking are internet banking, a banking facility provided to the customers through which the customers are able to perform a number of monetary and non-monetary transactions using the internet through the bank's website or applications. Mobile banking. Almost all the banks have designed their mobile applications with which you can perform transaction at your fingerprint. For this, 4 things are required: a smartphone, internet, mobile applications and mobile banking service enabled in your bank account. ATM, automated teller machine, popularly known as ATM, is one of the most common and initial services provided under e-banking. It is not just a machine with which you can withdraw cash as and when required, but it also allows you to check your account status, transfer fund, deposit fund, changes mobile number, change debit card PIN, that is personal identification number. Debit card. Debit cards are used in our day-to-day life so as to perform n number of transactions. Debit cards are linked to the customer's bank account, and so the customer only need to swipe the card in order to make payment at point of sales, outlets, online shopping, ATM withdrawal. In this way, the amount is deducted from the customer's account directly. Credit card, just like debit card, a credit card is also a payment card which the banks issues to the customers on their request after checking their credit score and history. It enables the cardholder to borrow funds up to the pre-approved limit and make payment. The limit is granted by the bank which issues the card. The cardholder promises to repay the amount within a stipulated time with some charges for the use of credit card. Point of sale. Points of sale system refers to the point in terms of data, time and place. That means retail outlet, where the customer make a payment using a plastic card for the purchase made or service received. Electronic data interchange. EDI is a new mode of communicating information between businesses electronically using a standardized format which was conveniently paper-based. Electronic fund transfer, EFT. When money is transferred electronically from one bank to another, it is called as electronic fund transfer. It covers a direct debit card, direct deposit, wire transfer, NEFT, RTGS, IMPS, etc. Benefits of e-banking. It enables a digital payment which encourages transparency. It allows 24/7 access to the bank account. It allows send notifications and alert to get updated with the banking transaction and changes in the rules. It lowers transaction cost for the banks. It is convenient and easy for customers as they are not required to visit the bank branches in every time. It's a natural. Any type of banking transaction performed through electronic mode comes under e-banking. It is a secure, fast and convenient electronic banking facilities that allows customers to undertake online banking services anytime during the day and at any place using the internet, for which the customers used to visit the banks in earlier days. Thank you.